Welcome, welcome, welcome to the third episode of the Visionary Tax Podcast. Today we have a very interesting guest. Shehan Chandrasekera is a CPA in the state of Texas and New Jersey. A partner in his firm JAG CPAs & Co., Shehan specializes in business and individual tax planning and consulting for small businesses. Shehan has a broad tax knowledge of various industries, including real estate, construction, e-commerce, healthcare, manufacturing, and recently the emerging blockchain and cryptocurrency related industries. Today we're going to be taking a deeper dive into the tax and accounting issues that Shehan is seeing at his firm and in the US, rules and regulations that are helping the industry mature, as well as some very interesting things that have happened to him in the cryptocurrency space. I think you guys are going to like this podcast and his thoughts on where this industry is going and how you can get involved, or if you're looking for a CPA yourself. So for starters, could you give us a little 30 to 60 second recap of the cryptocurrency space for you on the tax and accounting side?
Yeah, I mean, it's an emerging industry. Right now, a lot of professionals like me are looking for the guidance from the IRS and other agencies. Right now, what we are doing mostly is implementing best practices based on the experiences we have with the tax returns we have done for the other businesses. So when it comes to our clientele, we have cryptocurrency investors, weekend miners, various startups in the blockchain industry, and people and entities who want to go ICO. Those clienteles, they come to us, and we help them with their accounting and tax side, and also we connect them with the right individuals who know about the industry, such as lawyers, R&D credit individuals like yourself, and other important people.
Definitely, yeah. No, it's a very interesting industry. One where you can't really do it all, just because of the complexity of it all. And I guess one question that I have for you is, how did you get into this space? And as a CPA yourself, why did you incorporate the emerging blockchain and crypto into your firm?
Yeah, so I got into the industry as a personal investor. I would say last year, beginning of the last year. One of my colleagues showed me his phone. He was like, "Hey, I invested in Bitcoin when it was like at that time I think it was like $500-600, and now I made like $3,000-4,000." And I didn't believe him. And at that time, I had no idea about this Bitcoin or the blockchain. But I was always playing with the stock markets and other investment tools. So he showed that to me, and then I did my own research, and realized how new this thing was, and how many people were unaware of this new class of asset. Then I started with Coinbase, opened up my account, started doing some investing. Fortunate enough to ride that huge wave we had in December and January, and just became an investor in that respect. And then also I started mining as well, just to see how it is,
Right?
Just to get an idea.
Yeah, no, I think that's kind of how we all kind of found it. None of us really understood what it was, and then look a little bit deeper into what actually some of these things are. It's very interesting being on the tax and accounting side of it all, as you can imagine. One thing that you brought up is your Coinbase, how you kind of got onto Coinbase, and I just recently saw that you had gotten hacked on Coinbase within the last week, was it?
Yeah, it was pretty recent. So Coinbase is one of my oldest accounts in the crypto space. I opened up like last year. I also have a two-factor authentication, but the hacker was somehow able to bypass that, go into my account, and did some transactions, and it was interesting what he did. So basically, I had Bitcoin Cash, and Ethereum. So when I got the notification from the Coinbase, a hacker had already converted Bitcoin Cash and Ethereum into Bitcoin, and he was just about to transfer the Bitcoin to his personal wallet or wherever he wants that money in.
Right.
And at that time, I knew that I didn't make this transaction, so I called Coinbase, put a temporary hold on my account, and basically disabled my account so nobody could access the account. So that's what happened.
Yeah, I mean, you mentioned the times that this happened. 5:37, you got hacked. The hacker sold the ETH and the Bitcoin Cash. You got the alert at 6:50. And at 6:55, you called and said this wasn't my account. What would have happened? Do you think if they actually went through with it and it was sent to an address? And I'm sure Coinbase gets these types of calls all the time, but were you able to get that far as to what would have happened?
No, if the Bitcoin went to his personal account, I don't think I can recover the funds because the Bitcoin and the blockchain, by definition, you cannot reverse once something happens.
Right.
So I'm glad that I caught at that point of time without being too late. But still, I'm not happy with the situation because I didn't want to sell my Bitcoin Cash and Ethereum into Bitcoin. But anyway, I'm glad that I didn't lose my funds.
Yeah, no, I mean, it's a little bit of a wake up call for myself. I always thought that Coinbase was the most safe, trusted exchange out there. And I think the moral of the story is just, even your 2-factor authentication, sometimes may not stop some of these hackers. And I know you mentioned that, having a cold wallet, is always the safest storage.
Yeah, having a cold wallet is the way to go because it's not connected to the internet or any network. It's basically a object separated from all these digital mess. So there's absolutely no way a hacker could get into a cold wallet unless that person physically steals it. And the other point that I want to make is that on Coinbase, you have your wallet and your vault. So I always kept my, kind of like a long-term investment in my vault because I thought that was more, that had more security than the wallet. But, like I mentioned you before, hacker was able to go into my vault and they were still able to get in and, do the transaction. So
Right.
Moral of the story, don't keep anything on the exchange.
Yeah, right. Always. Yeah, yep, exactly. And what type of cold wallet do you have? Just out of curiosity.
Personally, I don't have any cold wallet. I don't think I have, that much of investment to justify the cost of having
Totally.
just a cold wallet. But I have clients who have Ledger Nano. They have they have told me that it's working great, and I think that's the problem. For a lot of these amateur to small to mid-sized investors, you kind of want to keep your money in the exchange if you want to day trade or if you want to just capitalize on swings, because transferring money from your wallet to the exchange, it takes time too, and if your gains and losses are based on just a matter of seconds or minutes, it's gonna affect your trading pattern. So
I do want to bring that up. That's a good point. This is a very confusing space. I remember when I jumped on, it took us months to even realize there were exchanges, and then when I did, I remember I had Neo at one point, and I was it was on my Neo wallet, and I was trying to send it onto an exchange. I ended up sending my Neo to a gas, and I was never able to recover that just because there's no support for some of these wallets. It's just one of those things where this industry is so new. They're creating these wallets, but there's no support for them, and so you really got to know what you're doing. It was a wake up call for me, and I'm sure it was for a lot of others. I thought that was very interesting that you recently got hacked. I think I saw it on your LinkedIn a few days ago. So it's interesting. I guess one of the questions that I have for you is, what do you find exciting when you're working with a new client? Is it the ICOs? Is it more helping the individuals, the businesses? As a CPA yourself, what do you enjoy working on in this space?
I think for me, what's most interesting to see is that how can somebody convert a typical, well-known, application or like a industry or a transaction into a blockchain-based application, and how that person can create value using the blockchain. It could be eliminating the intermediary and bringing more value to the two parties for the transaction, the buyer and the seller. So things like that, it amazes me all the time. What did technology do to typical, financial transaction? But other than that, I enjoy working with, investors, people with mining operations, and people, who ask my advice on, hey, whether I should invest on these ICOs. And IT people and these techie people in general, I think they have a very interesting mindset towards the technology and how they see the world. So it's always refreshing to deal with that type of clientele who see the future before other people.
Absolutely. Yeah. I mean, there's so much innovation going on in this space. And, that's one of the reasons why, I started my own firm, Visionary Tax, which, we specifically focus on research and development tax credits for the emerging tech industry. And blockchain is what really sparked that for me. I think it was, one morning I just realized, wow, everything that everyone is creating in this space, it can be considered research and development, just because everyone's trying to create something new for the first time, and, on the tech side specifically. And, I'm right there with you as far as just wanting to see what people are investing in, what they're creating, what they're developing, and how the industry is maturing. And as you mentioned earlier, it's, we're kind of just waiting on, the tax and accounting guidance from the IRS. So I think, one thing that I know a lot of people have questions about is ICOs themselves. How do you start one, and should a CPA be the first person you talk to?
No, I think when it comes to an ICO, I would say the first major question is where you're going to form your entity. I see that a lot of ICOs being formed in countries like Singapore and Malta, and some little Europe countries that have very friendly ICO rules. And the second thing you need is a legal advisor who knows the crypto industry and who have worked with blockchain clients, because there's going to be issues with the SEC and various other forms of government entities and you really need to have a legal advisor who knows what they're doing. And I would say having a good CPA and a financial guy is the third most important element for having an ICO. As a CPA, my job is to make sure the accounting and then the revenue recognition is done properly. And then when it comes to tax compliance and state tax compliance, whether have they been done properly, things like that. And these projects, it's always a learning curve, for me, for the lawyers, and for the client itself, because it's pretty new and everybody's trying to figure out what the right way to do things. People have different ideas. But for me, what I try to do is, implement the best practices, be conservative, and also be aware of the new law changes and adapt according to that.
Right. I mean, that's what CPAs, have done in the past, is just, you have to adapt to the changes, with the most recent tax law. And I think that's why I also found it so interesting, is it's always going to be changing at this point. And I guess, where do you see things going here in the U.S. In the next few years? I know you mentioned a lot of people are going offshores, but are they doing things to make, ICOs more friendly here in the U.S.?
It's a very hard question to answer, but based on what I see on social media, I heard that Blackstone, a huge hedge fund, is kind of testing with having crypto as a new asset class. I see Coinbase trying to be an exchange, and they want to be overseen under SEC or some regulatory authority. So those things, those things, imply to me that ICOs will be will be treated like an IPO in the eyes of the IRS and the SEC, and it is good. And I think some sort of regulatory framework is required, considering the number of scams we have had.
Right.
And I'm not a fan of saying all the ICOs should be banned, because if you look at some statistics in the last year, I think ICOs raised more capital than venture-backed firms in the last year, and that was really surprising. And the other important thing about ICOs is that it basically democratized the venture process. So, meaning it's good for entrepreneurs, it's good for the economy. Anybody who has an idea, who has a great idea, can raise money to achieve that target. And it's great for the country and for the economy if it's done right.
Absolutely. I'm right there with you. I think, the fact that utility tokens, can just be integrated into any type of company, obviously you got to look into the, the regulatory, what needs to be done when doing so. But I think you're completely right on that, if you have a good idea, it makes sense to be able to keep these ICOs friendly in the U.S. just to create jobs, instead of, moving these outside the country. I think, embracing it is going to be a good thing. And, ultimately finding that, the regulations to be able to keep it here in the U.S. will allow us to continue innovating and growing, which what I love seeing on the research and development side.
Yeah, I mean, I just to add to your point, I mean, that's where we want the economy and the lawmakers and the government to be. But the challenge that we are facing is that the people who can make those rules and regulation changes, they're in a different generation. So they don't understand the blockchain. They don't understand the technology. I'll give you a good example. Look at, I don't know if you get a chance to look at the testimony that Mark Zuckerberg gave in front of the few lawmakers, and they had no idea what Facebook was doing. And imagine somebody's trying to pitch an idea for a blockchain. Somebody's trying to talk about how blockchain works. So that's where I see the disconnect. And I think, to be honest, I think that's the reason why it's the mass adoption of the technology and the laws keep getting postponed, because it just generation gap is too much to handle.
Yeah, no, I agree with you as well. I think the reason why I wanted to start a podcast was just to be able to talk to people in these emerging industries, that, the business owners, the tech entrepreneurs, and, what are you guys seeing? How is the market, evolving, and being able to just get the word out there. Hey, this is what blockchain is. This is what, CPAs are doing in this space. And, I'm really glad that we were able to link up, and you were, wanted to jump on and talk about, tax and accounting issues as well. I think one thing for me when I look at the accounting and tax space for blockchain is, what type of accounting systems are being created to start tracking all the transactions, to be able to scale this and be, a CPA that does the accounting in real time. I feel like there has to be a blockchain type accounting system that's just going to have to be integrated as well. Have you seen any of these, or do you know about any that are being developed or created?
So, we mainly use QuickBooks, and I know for a fact that QuickBooks, they haven't even looked at that the blockchain area and how they can integrate into accounting. I know Xero is somewhat they're doing some experiment with the blockchain, how they can convert that technology into like a new accounting system. But to answer your question, when it comes to accounting software, we don't have any accounting software to my knowledge, that automatically downloads all the transaction from the blockchain and provide an income statement and a balance sheet.
Right.
For the investors and the people who run mining, what I usually do is I ask them to connect their account to a coin tracking software like cointracker.io or cointracking.com, and there are several other websites. And they connect their account to those platforms, and those platforms have been pretty good. They're not 100% perfect. So those platforms, they do provide the cost basis, the wash sales, and the prices sold, and dates and stuff like that. And at the end of every month, I look at the reports and review those reports for the accuracy, because sometimes I have seen some mistakes on those reports, and
Interesting.
that's where we are when it comes to software in
Yes.
accounting.
I guess what type of errors have you been seeing in the software?
Mostly, it's sometimes for some reason it doesn't take certain transactions into account. You basically connect your API to the coin tracking system. Sometimes it doesn't download certain stuff, and then it starts all over again. So things like that, then I can kind of look at it and see, hey, this transaction, hasn't been recorded, so we got to do it manually. And the other thing is these coin tracking websites, sometimes they don't do the IRS wash sale rule, so they're not disallowing the losses at some certain cases. So there are a few things that I look for when I see those reports. But I mean, without those tracking software, I don't think we can do accounting or bookkeeping manually, because there's too many transactions and it's too much tedious work. So
absolutely.
I rely on those platforms, and I think with time, they're going to get better and better.
Right. So one question that I have as a research and development tax credit guy is, the companies that are developing, new technology here in the U.S., are they looking into, how to minimize what they owe, maximize their deductions and credits? And is the research and development tax credit something that, these blockchain entities are ready to start taking advantage of?
Yeah, I think like you mentioned when we began the conversation, I would say 99% of the things that are happening in the blockchain is something new, something that has never been done. So that's somewhat by definition is R&D, and you're eligible for the R&D credit. I'm working with a couple of clients, who are in the process of creating trading bots, and each trading bot has their own unique algorithm to make trades. So those clients, they should really look into R&D credits and the potential tax advantage for that.
Yeah.
And also,
go ahead. Sorry.
Yeah, and also another new thing that's coming up is decentralized exchanges. Because
Right.
if you take a look at Coinbase and Gemini, they're centralized, and that kind of defeats the purpose of having a decentralized currency or a blockchain. So I think in the future we will see a lot of decentralized exchanges, and the code for that, I think I'm pretty sure, I think you're the expert, building up a decentralized exchange is going to have its unique challenges and unique code, and that's something really new.
Yeah, and I want to go a little bit deeper into that. The artificial intelligence and blockchain is disrupting almost every industry, and what they're trying to do is create something new that's never been done before. And when you're trying to create a decentralized exchange or a new project, on the outset of a project, you didn't know exactly how it needed to be done to work efficiently. And when going through the motions and trying to figure out, is this going to work? We're going to test different source code. How's this look on, the third-party integration side? All those are types of qualified activities that we look at when determining, how qualified is an individual as far as trying to create a new product, process, technology, or software. And so, these are definitely the companies that we work with in the blockchain space, the ones that are developing here in the U.S., paying wages to employees here in the U.S. or contractors here in the U.S., as well as like the supplies, the GPUs, the computers. These are all supplies that can be taken towards the credit.
Yeah, that's interesting. I mean, you brought up another good. I mean, in addition to the R&D credit, when you talk about the GPUs and CPUs, there's huge tax savings opportunities with Section 179 deduction and the bonus depreciation. So anybody with a mining operation, they should really talk to your tax advisor and see what suits them the best when it comes to tax savings. You could write off everything in your year one using Section 179 or bonus for going forward. But I always, when I get asked a question, hey, should I write off all my equipment in the year one? My question is, what's your projected income for the next 5 to 6 years? Because if you're trying to make income in the next 5 to 6 years, my recommendation is that you should always try to distribute your depreciation expense to smooth out the income and the taxable income.
Right, and rolling off that, the research and development tax credit, we can't really look at any depreciable assets. So if you could, not have to write all that off in that first year, we can take those, supplies towards the credit, and that's also something that we discuss with the CPAs when looking into, hey, this is what the credit could look like if we were to kind of reallocate some of the expenses. And so, yeah, I think it's a really interesting space. I hope that the industry continues to mature, and, the research and development tax credit, as it just became permanent in 2016, I do believe a lot of these emerging technology companies are going to be more aware of it in the next few years. A lot of CPAs are going to start hearing about it, especially in the tech side, as we continue to get the word out there. That's what we want to do, is just educate the industry and the community that if you're in the blockchain or any of these emerging tech industries, that you should really be looking into the research and development tax credit.
Absolutely.
So one thing that I remember vividly from right when I started learning about cryptocurrencies and the blockchain was, tax returns are going to be on the blockchain by 2025. Realistically, what do you think about the blockchain and tax returns being on the blockchain? Just in the accounting going forward. I know, accounting, as it is a very data entry driven industry. How do you see the blockchain, tax, and accounting being merged together?
The tax returns being on the blockchain by 2020, I highly doubt it. Just because, think about the IRS and the government. IRS is one of the most centralized entities in the US. So, and why would they believe in the blockchain? And the IRS is a pretty old school organization as well. So I don't see
totally.
I don't see tax returns being ending up on blockchain by 2020. But in 34 years, maybe that's the case. And the other question you asked was the accounting side. I know that if you take a look at the history of the accounting, we started with single entry accounting, and then we came into double entry accounting. I think with the blockchain, we can explore things like triple entry accounting, which haven't been explored before, even though some people have talked about it in the late 2000s. So I would be really amazed if somebody can build like a new accounting software like QuickBooks or Xero that integrates all triple entry accounting, download all the transactions from the blockchain, and if somebody can incorporate all those things, that's when the accounting industry is going to change significantly. And I don't know when that's going to happen, because accounting, like you said, it's an aging industry. It hasn't seen a lot of innovation probably up until now because of the triple entry accounting. So we just had to wait and see.
Yeah, and I think have you come across Audit Chain?
So I'm not directly involved in audits, but then the blockchain is, I think, in my opinion, it's going to change the way companies are audited, because audit is about verification, whether that asset exists or not, did that transaction really happen? And blockchain answers a lot of those things by nature. So I see a lot of efficiencies created in the audit process because of the blockchain technology and the fundamental characteristics of it. And I think that's going to save time, and that's going to produce more transparent and more accurate financial statements.
Totally. I'm right there with you as well. I think one interesting project that I think you should take a look at is Audit Chain. They're aiming to actually solve that, accounting real-time reporting type function. And I guess, they're going after the decentralized continuous audit and reporting protocol ecosystem. It's a very interesting project. They're out of Switzerland. I'm excited to see kind of what they get up and running. They do have, audit fees. It's just a very interesting project. I think you should take a look and kind of, I hope to kind of be involved down the road too, just to kind of help, make this industry, mature, and especially on the tax and accounting side. There's nothing I'd like to see more than us be able to figure some of these things out. And I think once that happens, the industry will continue to mature and be taken a little bit more seriously.
Yeah, absolutely. Yeah, I'll take a look at that, and it will be interesting because there's IFRS versus GAAP issues, US GAAP, and there's different financial standards. So because of the blockchain, now we're going to invent like a new accounting standard. So I think there's too many things, too many variables. So I'm waiting and seeing, how everything's going to span out.
Yeah, same with me. I'm looking to always find the next up and coming blockchain project. Especially if they're here in the U.S. developing, I'm always asking the question: are you guys paying your wages in fiat or in cryptocurrencies? Just so I can get a better idea as to who's developing what, how they're getting paid, and ultimately if they're eligible for the research and development tax credit. I really appreciate you jumping on and kind of discussing some of these tax and accounting related issues in the blockchain and cryptocurrency space. Was there any last final thoughts that you had for yourself or from JAG CPAs out of Houston?
Just one quick tip, if somebody wants to know about, how to treat certain things for tax purposes, maybe you could be a minor investor, lender, or like somebody who's doing an ICO. I would definitely look at one of the articles that I wrote on the Tax Advisor. In that article, I'm just trying to give an ordinary reader a quick guide type of thing about the taxation of these crypto transactions. So I highly recommend looking into that article so you know how you're going to get taxed and what to expect.
Yeah, it's a great article on the Tax Advisor. You can also find it through the JAG CPAs website, which is JAG, JAG CPAs TX.com. And Shehan, we really appreciate you jumping on today, and we hope you have a great rest of your week.
Thank you. Thanks for having me, and looking forward to work with you on R&D credits in the future.
Absolutely. We hope you guys all have a great day. Thanks again.
Thank you. Bye.
In closing, I just want to mention that if anyone out there is looking for a CPA on the cryptocurrency space, whether they're doing investing, trading, or trying to create an ICO, Shehan is a great reference for you. He is, again, out of Houston, Texas. I do also want to mention that anyone that is developing any type of new technology, whether they're in the blockchain, artificial intelligence, virtual reality, augmented reality, financial technology, mobile app development, or software development, and you are here in the U.S., this is something, the research and development tax credit, that you want to start looking into as far as, tax planning. Can we get our money back? And again, you don't have to be in a profitable tax position as long as you're within the first 5 years of gross receipts and you are still making less than $5 million in gross receipts. And for those who have never heard of the research and development tax credit, it is a tax credit dollar for dollar reduction in tax liabilities that is for any business developing a new product, process, software, technology, invention, or patent, and is paying wages to employees to develop this type of technology or software, as well as contractors here in the U.S., as well as supplies or materials used for testing, prototypes, computers, GPUs, cloud storage. All of these payments and amounts paid to developers can help generate research and development tax credits, that is dollar for dollar reduction in year-end tax liabilities and possible, offset of quarterly payroll tax owed to the IRS for businesses less than 5 years of gross receipts and less than $5 million in gross receipts. Again, this is just a tax credit that should be taken for every business in the emerging technology space. And part of this podcast and what we do at Visionary Tax is we want to educate the CPAs, the lawyers, the tech founders, the entrepreneurs themselves about this research and development tax credit that became permanent. And to just get the word out there, we really are looking for, CPAs, lawyers, tech founders themselves, entrepreneurs, anyone in the space that's developing or has a unique project or specialty. We're looking to have join our podcast just to talk about the emerging industry as a whole, where it's going, their expertise, trying to get the word out there for yourselves. We see a podcast as being, the future of newsletters and getting your information. So feel free to reach out to us directly. You can find us online at www.visionarytaxes.com. That's TAXES.com. Email me directly at tyler@visionarytaxes.com. Or again, you can reach out directly at 310-430-2422. We'll definitely get back to you and answer any questions that you or your business may have. Thanks again. Have a great day.